probability trading strategy, you're full of crap.
If things aren't working, then that's a quick trip to the poorhouse.
To learn how to drive the beater before you can drive the Lamborghini.
Now you're playing with the house's money.
All right, we're back. Hope everybody had a great Thanksgiving last week. Hey, why do some traders think they can outsmart the market by just following some simple rules? And are emotions really the enemy when it comes to trading success? I heard a really good quote by a football coach this past weekend, the coach of Georgia, and he says, I want my players to play with emotion, but not emotionally. So today we're diving deep with Alan Edward, aka the Divergent Trader, to reveal a myth that stops even the most seasoned trader and makes sure to stay tuned to the end because we, of course, save the best for last. So welcome to Trading Truths. I'm Dennis Wilborn, joined by Mike Lamothe, the co-host, and we basically, what do we do in this podcast, Mike?
Yeah, so I can't wait to dive in and talk to Alan for a bit. He's been trading full time now for over a decade. He is the founder and CEO of Divergent Trader, where he provides education and mentorship to traders. His popular quote, trading success isn't about eliminating emotions, it's about learning how to work with them. That encapsulates his philosophy on using emotional intelligence effectively in trading. And personally, I couldn't agree more well with that statement either. His latest book, The Blueprint to Trading Psychology, emphasizes the importance of emotional intelligence in trading and offers actionable strategies to help traders maintain discipline and mental resilience. So, Alan, welcome to the show, my brother.
Yeah, thanks for having me on. It's a pleasure to be here.
So, how did you first get into this trading world, and was there any pivotal moment that sparked your interest way back when?
Yeah, how I first got into it was actually through my cousin. He was trading at the time, and he was doing really well, or so I thought. He was making a lot of money, but looking back now, he was obviously using really bad risk management but getting lucky at the time. But that's what sparked me interest. So I was like, man, this looks easy. The same thing that everyone says when they first see it. So that was my initial spark. And then I went down the rabbit hole, going through all the different strategies and things like that. Spending years, going around in circles, looking externally for the answers before finally realizing the actual answers were internally. So, and then from there, spent a few more years, working on myself and the psychology side of things, and finally finding my way. And in that process, I found a passion for the performance and the psychology side of things, and that's a main focus these days for me. That's what I really like to work on with other traders, because I find more enjoyment out of that, to be honest. Because I don't know if you guys are the same, but trading does get a little bit boring after a while.
It's supposed to. When successful traders, trading gets boring for them. It really does, and that's the way it should be. So if we're trading for excitement, if we're trading just for excitement, that we've all been there and done that.
Oh yeah, no. When I think of trading, I kind of think of it like bowling, right? Like you just roll the ball down the lane in the same way, and you'll knock the pins down every time. But when you're just that much off, that's when things could go awry. And
that's what leads to the gutter balls, isn't it? It's kind of like that. Felt like my trading back in September or August and September. I was throwing a lot of gutter balls, but that's beside the point. We've corrected that. We're back on track for our regular, nice, profitable year. And so, anyway, so hey, Alan, I got a real quick question for you, though. Before we get away, so how has your experience as a stand-up comic and humor play a role in your approach to teaching and trading? And you do you do a stand-up comic routine?
No, no,
You don't?
no. I don't know where you got that from.
I tell you, well, I guess it said it was a fun fact about you, but I guess it's like so many other things. Sometimes things are just a myth.
Yeah. No, I've never been a stand-up comedian, though. I don't even think I'm that good at telling the jokes, to be honest.
So, okay. And so, hey, Alberto asked if you are from Sheffield.
No, not from Sheffield. I'm in the northwest, near Manchester. Yeah, I don't know if you said the Blackburn. That's originally where I'm from, near there.
And so, okay. Well, hey, let's start digging in, Mike. Let's go ahead and start digging into some of the myths, and go right ahead.
Yeah. This one here is a fairly common myth, and the myth is that we all feel emotions. It's important to trade unemotionally, so therefore I should be more robotic in my trading. So, what do you have to say about that, and walk us through?
Yeah, I hate when I hear people say that, like, control your emotions and trade like a robot. Because you can't do that. Okay, so triggers and emotions, they're just natural responses to stressful situations, all right? And you don't have any control over that initially, but you do have control over what you do with it, all right? It's kind of like a telephone ringing. You don't have any control over that phone initially ringing, but you do have control what you do after it. You can choose to answer it, you can choose to turn the volume down, you can choose to chuck it away from you and go do something else. And that's kind of like the same way as how you want to deal with your thoughts. Okay, you can choose to engage or not engage. It's all about how you respond. And this is something I specifically work with traders, which is changing the thinking strategy. Because when you change how you think, you change how you feel, and you change how you act. And I'm a big believer in that is the big difference between a pro and an amateur. It's simply down to the way they think. They'll have exactly the same thoughts, but one will deal with it in a more healthier way than the other. So, for example, if a pro trader and amateur trader both had 4 losses in a row, they'll have exactly the same thought when they take the next trade. They'll be like, what if I lose this next trade? I've just lost 4 in a row. But with the pro trader, what they tend to do is they don't stay with that thought. All right, they'll notice it, they'll acknowledge it, then they'll leave it to one side, and then they'll focus their attention on what they need to do. They'll follow the plan. And what that does over time, it creates a positive domino effect, all right, over the long run. Whereas the amateur, what happens to them is they'll ruminate and worry about what's happened or what could happen. And this is what creates that surplus of stress and anxiety. They end up in what I call loop mode, which is that circular thinking state.
Oh, yeah.
And basically what this does is this is a negative thinking strategy. This is what leads to a negative domino effect. Whereas, the difference between that pro is they have a positive domino effect with how they think. So that's a big thing that I work on with traders. And one of the methods I like to use is detached mindfulness. I don't know if you've ever heard of it, but that's, again, learning to see the thoughts and feelings, seeing thoughts as passing events in the mind and learning to detach. And a good way of actually explaining this is apparently we get 70,000 thoughts a day. That's what's thrown about by psychologists. But we don't remember every single one. So if I was to say to you, Michael, do you remember every single thought that you had yesterday?
I don't remember every single thought that I had this morning.
Exactly. Do you remember so you don't remember every single thought you had this morning either. Okay. So what did you do with all the thoughts that you can't remember?
Not sure. I just forgot them, or they're just in there swimming around, waiting to pop up again.
So you did nothing, basically. You didn't pay much attention to them, and they faded away. But what about all the thoughts you do remember? What did you do with them?
They're on repeat.
Yeah, you paid more attention to them, basically.
Yeah.
So the state where you don't pay attention to your thoughts and they disappear, that's basically the state of detached mindfulness. And to access that, basically we need to access what I call the broker brain. It's your self-regulating system. So we have something.
What did you call it again?
I call it the broker brain. It's like your little helper.
Okay.
And it's basically self-regulates your thoughts. So all these thoughts that you don't remember, like you forget, something's flushing them away. Okay. And I call it the broker brain. So when you give it the correct signal, which is, not paying attention to it, basically not chatting to it and not engaging, It gets that signal, it puts it in a little warehouse. If you don't go back to it, eventually it chucks it in the bin. And and that's the correct signal. It's basically not chatting to it versus trying to do something with it. When you try and force the thought out of your mind or trying to do something with it, what you're actually telling the brain there is that this thought's important, and it will just keep it in the forefront, the consciousness, because it sees it as relevant. You know what I mean? It's kind of like a paparazzi. Paparazzi asks you loads of questions, trying to trip you up, but you have the choice of saying no comment. Okay, and when you give that signal to the brain, it gets it, and it'll put it to one side, and that's the difference. It's learning not to answer to the thoughts. And it's kind of like if I say to you, don't think of a pink elephant, and you say to yourself, don't think of a pink elephant, don't think of a pink elephant. What you're going to see? You're going to see a pink elephant. So
yeah, right, exactly.
You know what I mean? So if you just say, okay, the pink elephant, I'm not engaging with it, I'll focus on something else, eventually it will go away. Okay, and take my glasses for example. If I say don't focus on the frames of my glasses, all I'm going to see is them frames. But again, if I just say no, I'm just going to focus on what's in front of me. Eventually, it will fade into the background, and I forget about it. And that's the key, all right? Not answering. And this brings me to when traders try and rationalize the thoughts. They'll try and positive thinking, try and talk themselves out of it. But what they're still doing is they're engaging with the thoughts. And the brain just sees this as it's important. So what does it do? It keeps it in the forefront.
So what are some of the positive thinking things that people try to do that brings it to the front of the mind?
Yeah.
So what do you tend to see in people?
Yeah. So, positive thinking, that's a classic one, trying to talk themselves out of it. Distraction techniques, even things like going for a walk. Okay. People think if I go for a walk, I'll clear my head. But if you haven't got the right mental framework, what you're actually doing is you're just giving yourself more time to ruminate and worry about it, and then you're just going to have that surplus of stress and anxiety. So these things actually don't help, but they seem logical in a sense, but they actually have the opposite effect.
Yeah. Hey, Alan, in that area, I just finished. I'm reading a book right now by Dr. Nick Hall, and he's talking about change your beliefs, change your life. And it sounds like this is one of those areas where you're challenging your thoughts, i.e. what you believe, because sometimes we believe things based on our past experiences. They don't necessarily have to be true or not true. And so my question for you is, okay, how do you roll this aspect of, robots don't have feelings or are challenging your thoughts? How do you roll that into your daily routine, your weekly routine? At what point do you challenge your thoughts and get yourself back on track by either reframing the thought in a better way? So how do you do that?
So yeah, reframing, like I said, you have to be careful not to end up in that loop more, trying to overthink things. But yeah, I do reframe things at the beginning, and then I make sure that I detach. I have this mental model that I use with traders. I call it DCQ, which is the first step is you don't answer, and part of that can be reframing techniques. And one thing that I like to do is name the thoughts. I find that's a good way of when you can name them, you can tame them. So for example, like if I have what if thoughts, I say, okay, I acknowledge I'm having what if thoughts. I'm not going to chat to them. I'm going to detach. So that'd be my first step. And then my second step is calm. C stands for calm. So usually when you're in this state, it's because you've been triggered by the fight or flight response. Okay, so your body's in that stressful state. Your muscles might be tensed up, your heart might be beating faster, things like that. So the second stage is to self-regulate yourself, and that means like relaxing your muscles, taking deep breaths, getting yourself into that calm, logical state. So that's my second stage. And then the last stage is a question. So by asking ourselves a question, we remove ourselves from that emotional brain. All right, you bring in the logical part of your brain to the forefront by asking a question. So I tend to find these 3 steps, in order. They tend to help me reframe them difficult situations better. So yeah, I hope that makes sense. So that's kind of like what I like to do.
No, I love that. So what kind of questions do you ask yourself?
Usually like, what's the plan? or what's the one thing I can do right now, to bring me to my goal, something that makes me think,
Okay. Do you find that most traders, when you're talking about, this aspect of emotions and this type of thing, do you think they try to take on basically too many things to change rather than just looking for what's my primary incremental thing I can improve on this week or today?
Yeah, 100%. I think if you try and focus on too many things at once, you end up doing none of them. And it's been proven, if you want to create a habit, for example, you better focus on one thing, and then that makes it easier. And when it's easier, you tend to do it. You know what I mean? So whenever I work with traders on like creating a new habit or a goal or something, it's always one thing. What's the one thing that will create that domino effect?
Yeah. So
well, when they ask, what the plan, like when you're asking yourself, well, what's the plan, or when the new traders are asking themselves, well, what's the plan? Do you find that they typically are going back to their notes and saying, oh, my plan was to enter here and place my stop loss here and my targets are there, or are they trying to come up with some sort of a plan on the fly?
Yeah, well,
like a Monday night quarterbacking, Monday morning quarterbacking kind of thing.
Yeah, well, everyone's different, but yeah, when you have that plan, that definitely helps. I find if you've got that checklist in front of you, and you ask yourself that question, you go through your rules, and that actually brings me to, in the moment, in these stressful moments, you need to be able to react fast. And I'm a big believer in like simplifying your rules. If you can go through your rules quickly in the moment, you're going to react a bit faster and not overthink it and things like that. So if there's another takeaway from this call today, is that it's trying to simplify your rules a little bit, so you're not hesitating in that moment as much. But obviously, you need clarity. You need to be clear on your rules. You need black and white rules that you can just say off the top of your head. I think there's a quote in I don't know if it's Market Wizard, but you should be able to write it on the back of an envelope. It should be as simple as that. You should be able to tell a 4-year-old what your plan is or something.
Yeah,
can't remember exactly, but yeah, along them lines.
Yeah, I don't know. Who was that?
Was that Mark? Ed Secoda, or was that somebody?
I don't know. It might have been Michael Marcus. I don't know. I'm not too sure. I think it was the first one.
Mike Lamont was somebody that could have used that advice way back when. At one point, I had 100 different buy rules, about another 70 or 80 different sell rules. And in the moment, I'm going through this page like, well, it's hitting this one, this one, this one for a buy rule, but this one, and this one for a sell rule. What do you do? Simplify. Absolutely.
That's one of the beautiful thing about this whole thing is that, and sharing. You're getting 3 traders who are basically successful traders together to share with everybody else, and because that aspect of making sure you can write your rules on one page. I suffered from the same thing Mike talked about, and I was following the Investor Business Daily method, and they had like 27 entry rules and about 45 exit rules, and I'm going, that's too stinking hard, man. So I cut it down to one page. I've got 3 rules to enter, I've got 4 rules to exit, and bingo bango. It really makes a difference. But I think Mark Douglas was one who, in his book, talked specifically about, also talked about that aspect of keeping it simple. Even if it's just one trade setup and trigger, focus on that until you master it, and you'll be amazed what kind of success you can have. So, Alan, what are some of the stories you've had in working with other traders in this area of not managing but understanding their emotions and how to work with it? Do you have any interesting stories that you can tell? You can change the names to protect the innocent.
Yeah, what I find an interesting part of working with traders, especially on that thinking side of stuff, is we all have like beliefs about how we think. Like I call them distorted positive and negative beliefs. So for example, when they lose a trade and they'll think about all the different ways that they can overcome the next losing trade or something like that, and it's I don't know what the correct word is, but basically it's a false belief. Okay, so let's say we lost a trade. What do we need to do? What is the answer to that? It's basically to follow the plan and manage risk. That's it. You've got your answer. But,
Right on.
but they have this distorted belief that if they keep thinking about it, keep going over it, they'll find some other magical solution or something that will snap themselves out of it. But what does it do? It keeps them in that loop mode, that circular thinking state, and they end up creating more anxiety, more stress. If they just learn to detach from them, it makes it so much easier. So that's one of the things that I work on with traders specifically at the beginning is breaking down these distorted beliefs, because if you don't break them down, then any exercises or things that we do aren't going to work, because they're not going to want to do them and they're not going to believe that they work. So yeah, that's probably something I find really interesting.
So
Mike,
for somebody there that's stuck in that right now, what would you say is the first step that they should take?
So what's stuck in which bit?
In that kind of rumination of I just had a losing trade. I shouldn't have raised my stop loss that quickly. Well, look at it now; it's taken off without me, and they're just in that kind of a vicious circle.
Yeah, well, obviously, I'd probably say come to me and work with me. I'll help you, because it's hard to do on your own. But the first step is obviously creating awareness. So I'd start journaling, and just asking yourself specific questions like, why do I think this way? The why questions are the important ones, not the what's. The why's open your mind a bit more. But yeah, journal what you're thinking, what you're feeling, and a little exercise you could actually do. I learned this from Tom Basso, where he said he'd just stick a sticky note on your computer with the word observe, and every time you see that, just take a moment to observe what you've been thinking and feeling, what you've been doing, and that will create the initial awareness. So that's something you could do to begin with, and just try and break down how it is that you think and why you think that way. And if it is erroneous, if it isn't helping, then you could look on working to reduce it. So I'd probably say that's one way. Journaling is the key, really, definitely.
Yeah,
journaling.
Absolutely.
Yeah.
So Alan, before we jump onto the next myths, one of the things I want to ask, also with this aspect of feelings, is you're coaching in somebody and getting them to come to grips with what they believe or their thoughts. Have you found that that across multiple traders, what are, let's say, the top 5 issues that majority of them have, and that tends to repeat itself across a wide gamut of traders? I know I've got 5 pain points that most traders have, or not 5, I have 10 that I've identified for my client, my ideal client. And so I just wonder what you've run into. I'm going to compare notes with you.
Yeah, like around the 5 main problems that I see with traders. Yeah. So the number one is how they think, all right, and then that usually comes to a lot of the things. But yeah, like if they'll come to me saying, I'm struggling with losing, dealing with losses. Okay, and again, what's that come down to? The way they think about the losses.
Yeah.
So a lot of it is that kind of thing, not being able to deal with the triggers and emotions, and not being able to deal with them in a healthy way. So that can span for lots of different things. So that's on the psychology side. Obviously, there's the practical things as well, like the strategy. They might not even have an edge. That's quite common. They don't understand perhaps the probabilities, how it works, and how important risk management is in relation to it, things like that. I find that's quite a common one. So yeah, there's 3 bases you need to cover really. It's your strategy. You need to make sure you got an edge, because if you haven't got that, it doesn't matter if you've got the best psychology or the best risk management, you're going to be tossed. And then there's risk. There's risk management. If you haven't got that down, it doesn't matter if you've got good strategy or good psychology. And then obviously the psychology. But they're the 3 pillars. They're the 3 things that need to be solid. So it can be a combination of them with traders. But it's usually psychology, though. That is usually the one. Technicals is the easy part. Sorry.
Yeah, and I agree with you wholeheartedly that oftentimes people will focus on their pain points, but they don't, that they're unable to restructure what they need to do to get over those pain points. In other words, like if I'm 25 pounds overweight, I'm carrying the pain of that, right? Well, how do I start taking care of that? One, I start pushing away from the table. Two, I start exercising. I start running more. I involve my wife in this and all that kind of stuff because we both of us love physical fitness and all that kind of stuff, and I know Mike does also. But if I focus on, oh darn, I'm 25 pounds overweight, and that's where my thoughts stay, that will tend to push me to being 50 pounds overweight. And if you know what I mean.
Yep.
And so it was a great analogy back to, did you have that experience, Mike, when you were running marathons?
Which experience was that?
Well, I mean, just your focus, because there's so much interest in the focus of psychology of sports and psychology of trading.
Sure. Yeah. Well, when you're exhausted, that's when all the negative thoughts it's like they're waiting in the wings, waiting for you to get tired and see when you're vulnerable, and then that's when they start to pop out. And because you brought up the marathon, I'll share the story with the first marathon that I ran. I'm at mile, I think it was about mile 18 or 19, New York City Marathon. I had just gotten into the Bronx, and right before the Bronx is Manhattan. And Manhattan is jam-packed. The streets are lined with thousands of people. Everybody's cheering it. Like when you're coming off of the 59th Street Bridge, you could just hear this roar of the crowd, and it really is an incredible experience. But then you get into the Bronx, and it's crickets, right? So feel like you had wings, and then all of a sudden you're greeted by the steep bridge. You get over the bridge, and then there's nothing.
It's just you and your thoughts.
It's you and your thoughts, and that's where they say that, there's the wall, and they call it the wall for this very reason. And so I found out the hard way what the wall was, and my legs didn't want to go anymore. And I had never run a full marathon before, and even in the training up to it, the furthest that we would go is 20 miles. So here I am with another 8 miles ahead of me, my legs not wanting to carry on. I'm like, oh my God, I'm not going to be able to finish this thing. And so I actually break down in the middle of the street and I start to cry.
Oh, no.
Right. And momentarily. And then I start willing myself out, like, no, like I start like yelling at myself to keep going, and somehow willed my legs to one foot in front of the other, in front of the other, in front of the other. And then ended up getting out of the Bronx back into Manhattan, and then one soggy, blistery foot later, find myself crossing the finish line. But it was something. Yeah, you really need to will yourself and focus on the one step in front of the other, not thinking about 8 miles ahead, but what's my next step?
Yeah.
So and that's so applicable to trading. Alan, in that situation, and you've kind of answered, you have answered part of this, but what type of walls? Mike described the wall from the run that an athlete experienced. They hit the wall and they feel like they can't go any further. I know in my trading, I've been frustrated occasionally where I'd hit the wall, and mine had to do with using mandatory stop losses, and blew up a couple of accounts because I wasn't using mandatory stop losses. What kind of walls have you experienced in your trading in this area of emotions?
Good question. So I think one thing for me was, hitting a plateau of like just feeling like there's nothing else to do, having no goals, and I found that too hard to be. So one thing I always try and make sure I do is to set new goals, to break past that plateau. That's one thing I'd probably say for me is that, because it's easy just to get used to trading and just hop along with it and not try and push yourself a little bit more.
Cool. Yeah. So, well, let's get into myth number 2. But before we do, guys, if you enjoy these podcasts, I encourage you to both subscribe to the podcast over on Spotify, our YouTube channels. I'm going to be putting up some links in the description on on when we do post this, where you can actually also subscribe to Alan's YouTube channel and his newsletter that we'll be putting those links on there. So with that said, isn't trading all about taking every opportunity, or is there more to it? In other words, more trades equals more money.
Over to me.
Oh yeah. It's your myth. Sorry about that.
Trades,
I didn't know if
money,
you were going
right?
to carry
That's how
on.
it works?
Yeah, I got you. Yeah, more equals more. This is a common thing that I suffered from, and a lot of traders that I see. You know, you think more trades, more screen time, more strategies will give you more. You know, more results. But the paradox of trading is less is more. You know, it's like the law of reversed effort as well. You know, the less you do, the more you make, and that's what applies to trading. And a big part of this that I say as well is you've got to optimize your willpower or your focus, whatever you want to call it. You know, it's kind of like a cell phone battery where you've only got so much before it depletes. Okay, and once it's depleted, that's when the emotional mistakes happen and the self-sabotage, stuff like that. So by doing less, you know, like less trades, you know, less hours, you know, traders tend to spend, when you're a newer trader, you spend 8 hours at the chart watching the charts all day. And what's happening to your willpower? That's getting depleted. So, you know, optimizing to do less can optimize your willpower. So less trades, less screen time, less strategies. Can you simplify your strategy? Like we were saying before, you know, if you simplify your rules, it requires less energy and therefore you'll make less mistakes and so on. You know, so a key focus in your trading should be to remove, not add, do less, not more. And, you know, your trading will improve. And I think a lot of it comes from like the 9-to-5 mentality. You know, a lot of people are blue collar workers, they come into trading thinking they have to work hard for money. You know, I have to do more. I have to sit there, watch the charts. I have to do more. You know what I mean? And it has the opposite effect. So I think, you know, it takes a while. It took me years to understand that as well. But it's something we all eventually learn, I think. You know, less is more.
Yeah, absolutely. That same experience on my side too. When you know, what I like to try to do is to plan for the absolute worst case scenario, right? And this goes back to when I was trading part time as well, because my education started to exceed what I was able to execute on consistently, right? So like I would see a trade in the middle of the day, I'll put that on, then all of a sudden the boss calls, you're in a meeting, you come back and well, you were up $1,000 now all of a sudden you're down 500. It's just like, oh, what? So by figuring out what the minimum effectiveness is or what you're able to execute that requires the minimal amount of work tended to be the thing that led to consistency, profitability, less stress.
Yeah.
You know, one of the crazy things about that more mentality. You know, my ego was such when I first started trading. I seriously thought that if I watched the screen all day long, that I had the power. I had the power to basically move the market. And
you hand out like Magneto trying to.
I know, you go up. And the thing that was so funny is, you know, that cost me two 6-figure trading accounts, you know, because of doing that, you know, that kind of stupid stuff. Because like Mark Minervini says, he says the cost of entering, you know, and learning entering trading is too low. In other words, you just have to have a broker's account and start making trades. You're a trader, right?
Yeah.
Well, no, that's not the way it is. That's the entry, but it took me a long time, you know, and I think it's the engineer in me. It took me probably longer than most because, you know, sometimes engineers have a ivory tower syndrome, thinking that, you know, I've been so successful at doing this, simply I can transfer that success over to that. And I tell people that, you know, I used to fly jet, you know, I was in the Navy for 23 years and flew jets off of aircraft carriers. And learning how to trade and manage my emotions trading it was more difficult than the fear I faced when I was flying jets off of aircraft carriers.
Wow, that says it all.
Some people, yeah. And so, but so with this less or more, what are some of the examples you might have, about traders who've succeeded by, strategically choosing to trade less?
Yeah.
Maybe your own story there, Alan.
Yeah, do you know what? Actually, there is a good story here about how I did that myself. And so I'm mainly a swing trader by choice. That's where I mainly focus. But I do day trade. But I spent years trying to day trade and not getting very good results. And the moment where I started doing less, focusing mainly on swing trading, and day trading was just something I did. Okay,
yeah,
that's when it improved. So I started to see that, and then I thought, okay, so the less is more is working. So now what I do is I only allow myself one trade a day, and I don't even look at it. I set an alert, and if the alert hits, then I'll go, and if it settles there, I'll take it. And just doing that one trade a day, has improved my results tremendously on the day trading side of things. But again, going back to the psychology side of things, I had to know myself as well. I knew if I was taking too many trades, that has the opposite effect for me. I knew I had to reduce it to save myself and myself, sort of. Optimizing my hours. Making sure that if I do take a day trade, it's just within the first 2 hours of New York, and that's it. Nothing goes on. That's fine. But it wasn't easy. It's hard not to trade when you're doing the day trading. But when you start seeing the results, that's usually the eureka moment. But I got to admit, day trading is probably the hardest form of trading, in my opinion. You have to be really on the ball. Really on the ball. And I think the highest failure rate is probably with day traders. For the reason that everything's too fast. You have to lose quick. You have to recover quick. There's a lot of stress and emotional energy needed to sustain a career in trading. With a swing approach, you can be a bit more chilled. You've got longer to recover and things like that. And you got time to forget about the trade being on as well. With a day trader, it's always in front of you. It's not out of sight, out of mind anymore. So, day trading's hard, and you've got to be really, really strict. You've got to have a strict routine. Your routine is super, super important for a day trader.
Interesting. Well, what do you think the allure of day trading is?
Yeah, well, I think a lot of it is obviously social media. You're seeing it all. Everyone's day trading, making money and stuff like that. But I think it also seems more logical, doesn't it? If you day trade, you're going to get more trades. More times at the chart, so therefore you're going to make more money. It's that illusion, isn't it? But like we just discussed before, less is more. The less you do, the more you can make. I mean, I know someone who makes 20% a year day trading, spending 2 hours a day, whereas a swing approach, you could make double that, and only spend 10 minutes a day. It's kind of like, does it really make sense to day trade from a time perspective? And that's something you need to understand. When you go into trading, you have to remember why you got into it. A lot of traders go in for the freedom, but they end up chained to the charts for 8 hours a day, and they forget that why, they forget the reasons for doing it. So, a swing approach can help you with that. But again, it just one of them common misconceptions.
Yeah. It's kind of funny. Both Mike and I are swing traders. And I tried the day trading thing, and all the things that you just described, that I find that the constant tick, tick, tick of the chart causes emotions to go crazy, and when our emotions go crazy, I agree with the comment that, was made. I can't remember if it was Einstein or Freud, but said that when our emotions get engaged, our IQ goes down. And so at least I attribute that to all my stupid mistakes I made when I was first trading. And so, what insights in your book, the blueprint to trading psychology? And as an engineer, I really love that name because, I also believe that, God engineers our circumstances. So the blueprint to trading psychology? What insights from your book would basically address this particular myth, Alan?
What? Sorry, the myth of what? Sorry.
Okay, the myth is more
More.
trades, more monies, and so how do you address that in your book?
Yeah, let me think. So the book is like a blueprint. So that's how I did it for every different kind of situation. There's like an exercise and tool to help you with it. Specifically with more equals more, it'd probably be trading like a business chapter. You know, where you basically learn your model, understand that it's about executing the system. It's not about actually trading. There's a big section on that. But also probably the probabilistic section, learning to think probabilistically, because I talk about how it's not the frequency that matters, it's the quality of the trades. So to get for trading to work, you need a large sample size for your edge to play out, but you still need a high quality sample size. So with day trading, everyone thinks, I can take more trades, so therefore I'll get to the lower probabilities quicker, the edge will play out. But you still need a high quality sample size, you still need a quality sample size to get there. So probably that one really, the probabilities, understanding how it works.
Yeah, and you don't have to be precise in your understanding of probabilities. Because I've done a lot of work with statisticians, and they have that cut down to the very perfect exactly probability amount. When you're talking about an edge, you just got to know if you got 50% or better. That's in my opinion, and that's what our charts and our setups do for us if you are trading a system with an edge. So, hey, just acknowledge a couple of Alberto said that using weekly timeframes has reduced his stress level dramatically. And Eunice AZ says, yeah, I think, he says, yeah, I think having less stress comes from being in a position to take care of everything else in life that is related to money and health. Wow, that's heavy. And so... And so, okay, hey.
So you can have a profitable system so long as your wins end up outweighing the losses, and that could mean that you win 1 out of 100 trades, right? 1 out of 100 trades. But if you're one winner that gives you 1,000 R, right, then you're dramatically outpacing it. And Van Tharp was the first person that I saw use this kind of analogy. He used it, I believe, in Super Trader. If not Super Trader, certainly the Definitive Guide to Position Sizing. Both of those books are absolutely fantastic. But yeah, like that's the secret sauce. I think to successful trading is part of it is know thyself, right? There's so many wonderful trading systems out there, wonderful traders out there, wonderful styles out there that you need to figure out, well, what do I kind of gravitate towards? Well, one of the best books that helped me do that early on was the Market Wizard series by Jack Schwager. Right? Alan knows that one. Dennis, you know that one too. We've spoken about that. You guys in the chat, let me know if you've read Market Wizards. But Jack interviewed top traders across the globe, hedge fund managers, day traders, swing traders, position traders, you name it. He's interviewed these guys, and you read through that, and it's like, oh well, this one sucks. I can't possibly do that. Well, this one actually sounds pretty good, and then you dive into that, and you go in deeper.
Yeah. I totally agree with that. I was just going to say, I totally agree with that, Michael. That's something I'm very big on with people I work with on the trading side of things. You have to adapt it to your personality, because we're all different. We've all got different psychological makeups, different beliefs. Okay.
Yeah.
So if you're trying to trade exactly like your mentor, you're going to have a hard time because you're not them. You know what I mean? So you have to adapt it to yourself, because when you do that, adapt it to your strengths and your weaknesses, you're going to trade better. It's going to be a lot easier. But yeah, that's something I'm always repeating. Adapt to your own personality, 100%.
And I agree with that. at the same time, though, I also believe that a person, because I've run into some traders and they go, well, it's, they said, well, it doesn't match my personality. It doesn't match my this, that, and all that kind of stuff. They use that as an excuse not to change their beliefs.
Yeah.
And so,
yeah,
a lot of the time, there's things that we need, that we want, but it's not always what we need.
Yeah.
Like a lot of traders might want to day trade, but it might not suit them. What they really need is, maybe to go up a few time frames, things like that. And that's where you need to be honest with yourself. If you've been doing the same things for engineer, your process, like what are you doing that's not working, and have that honest conversation with yourself, and I find that's what's needed.
So, hey guys, before we get into myth number 3, guys, and for everybody who's out there listening, this is the top myth we're going to be talking about. Alan, you brought up the concept of probabilities, understanding probabilities. And this article that came out on in Investor Business Daily this past weekend, you can see it says 11 stocks turned $10,000 into $290,000 in 11 months. Now, I have a problem with this headline because I went back and researched it, and they basically said that if you chose the best stock, performing stock every month for 11 months, you could be up that amount, and that's a huge amount. That's like a bunch of times. So I went back and did some probabilities on this, right? And now I didn't know what pot of stocks they were picking the winners out of, but so what I did is I just went and took a look at the S&P 500, and just say, well, what happens if I didn't. I took the IBD 50, and I said, what would be the probability of being struck by lightning compared to picking the best stock every month for a year out of the IBD 50? I reduced the sample size, and you know what the probability of picking the winning stock 12 months in a row compared to getting struck with lightning? I know. Well, drum roll, please. 2.2 billion times more likely to be struck by lightning than pick the winners. And so, anyway, that gets back to understanding probabilities.
Oh man, is there a comment section on that article? I feel like we should drop some from the Trading Truth team here.
And so, anyway, yeah, that just kind of blew my mind. Sorry about that. Sorry for getting chasing a rabbit there for a second. But the last myth is basically the belief that trading is a fast path to wealth. Alan, a lot of people think trading can make them rich overnight. Why is this such a dangerous mindset? And what's the truth?
Yeah, well, everyone thinks trading is a get-rich-quick scheme. But in reality, it's probably a get-rich-slow scheme, to be honest with you. Especially in learning it as well. It's like a degree. It's like if you're a psychologist and it takes you a few years to get your degree, and then you might go to higher education. That takes a few more years. Sure. And that's the same with trading. You can't expect to jump straight into the market, after reading a book at the weekend or taking a short course, and expect to go against the pros, the experts who've been spending years mastering the craft and the mental edge, and go and just take their money. It's not that easy. So you need to have realistic expectations going into the market. This isn't going to be something you're going to get straight away. It's going to take time and effort. And I think when you have that message in your head that it's going to take time, you're going to be a bit more easier on yourself as well. But going back to what we were saying, when you see headlines like that, everyone just sees money, quick and easy, fast, and it's just not the way. It's just not how it works.
Why do you think people think that you could make money so quickly? Like I see some people on Instagram and other places where, like people that look like they're in their 20s and they're standing next to their Ferrari or their Lamborghini, and it's just like, yeah, man, it's 5 years, you're still there, and away you go.
It's like Lamborghini guy.
Why can't it work for the old folks?
I was going to say you're spot on there, Dennis. It's the Lamborghini guys. There's a lot on social media, it's a lot of like the highlight reels of winning and all the positives and stuff like that, and it gives this distorted perception of what trading is really like. And I think that's probably a large part of it. It's hard work, it takes time and effort, but when you get it, it takes hard work, patience, discipline, and a strict routine, stuff like that. And that's not what traders want to hear, and on social media, things like that, that's not the message they're going to be saying to get people to work with them or whatever, to scam them, things like that. So I think it's mainly selling, marketing techniques. But an interesting thing to say actually is, in a weird way, that it could be a good thing, because like I was saying at the beginning, how I got into trading, that's what I first saw, all this how easy it was, and that's what got me hooked into it. So if that didn't happen, would I have actually even done it if I knew how much hard work? I don't know. But there comes a point though when you do learn it long enough, you spend a lot of money, there's a point of no return where you've just invested too much time, effort, and energy that you can't go back. That's what it was like for me personally. I wasn't going to just quit. I have to keep going. Kind of like the marathon analogy, Michael, like you said. You hit that wall, but then you can push through it. So I think, so it's a weird one.
So that's, this is such a great question, though. That aspect of the fast path to, and one of the things that I try to coach people to do is, they say, well, I want to be rich, and that kind of stuff. And I said, well, that's a noble, that's a great thing to want to be, but typically riches are momentary. Yeah. I like to coach them to, hey, let's talk about building wealth. Wealth allows you to both not only be financially free, but lifestyle free, also leave a legacy for your family, a legacy for your children, legacy for your grandchildren, and it provides them a template for what they can follow in their own life. And so I like to shift from the rich to the wealth, because wealth is something that's long lasting, and along with it comes a peace of mind, if that makes sense.
Yeah, definitely. I think what you're touching on there as well is having a purpose to trade. Like you've got like a why. This is something that I always jab on about, which is having a strong why, because an emotional connection to the goal. Because you can say you want to make $1 million, 100 million, but why? Why not 500 million? It's what that money can do for you. You need to find that emotional connection, and then discipline becomes a byproduct of that. Discipline basically means you're doing something you don't want to do. Whereas if you want to do something, you're more likely. If you've got a strong why, you're more likely going to want to do the things that are connected with it.
Oh yeah,
so that's why it's important to have a strong goal, a strong why. That's not monetary. Something that gives you that emotional connection. I find that's an important starting point.
Do you think that it's important to set a realistic goal, like having the big pie in the sky goal of I'm starting out with just a few grand in my account, but one day I'm going to turn that into millions? That's I don't think that there's anything inherently wrong with that per se, but do you think that it's important to have more realistic or perhaps more tangible goals? Like this is something that I'll be able to hit within the next 6 months or the next 12 months or something like that.
Yeah, definitely. What I like to do, there's nothing wrong with a big goal. I'm a big believer you should set a big goal that kind of scares you, that stretches you. Because a lot of people set goals that they feel they can achieve, so they underplay it. But yeah, how I like to do it is, you set your big goal and then you break it down. Okay, so you do your 5-year goal, and then you do your yearly goal, your monthly goal, your weekly, your daily, your right now. And then you can actually see. I like to do a schematic of it as well. Stick it on your wall. You can see the domino effect of just doing this one thing. Whether it's following your plan, this moment, that creates that positive domino effect that's going to get you to that big goal. So you can have your big goal and then break it down. Break your processes and your systems, put them in place to help you get you there.
Yeah, no, that's awesome. That goes right along with what I believe, from the aspect of, you have your huge goal, your big goal, and that could be a yearly goal, 5-year goal, 10-year goal, that aspect. But in reality, if a person just focuses there, they have very little control on whether or not they really make it to that goal. That's your dream goal, if you will. What you do have control over is those smaller incremental goals, like I'll follow my rules. I will basically, work my process and all that kind of stuff. Those are the intermediate goals that a person does have control over. And then that way they can celebrate, pat themselves on the back with, hey, I executed my system this week perfectly, even though I had a losing monetary week. I was successful in what I did. And that's what works for me, at least.
I'm the same. You've got to have them, the process goals. When you start focusing on the outcome, you're setting yourself up for failure. You see a lot of traders say, I have to make £500 today. I have to make this amount in a week, and it just doesn't work like that. You can't force your will on the market, the only power you've got is, the only control you have is follow the plan. You can enter, exit, that's it, and your response. They're the only things in your control, really.
And one of the other things that I've found works really well, and I want both your guys' comments on this, is let's say you have your big, let's say it's $1 million. You want to generate $1 million in whatever time frame. If I just leave that out there as my goal, make $100 million, that doesn't really bring satisfaction. However, if I break my goal down and said, well, in that $1 million, what that's going to allow me to do is, generate. In my case, my big dream is I want to generate scholarships for people who want to homeschool, who need the extra money. So that's one of the things. Develop the legacy for my grandkids, and I start breaking down that money into, here's what it's going to do. So that works for me, and it seems like it helps me to be more successful. What about you guys?
You want to go first, Alan?
Anyway.
I'm not sure if breaking up a little bit there. You look pixelated. Can you hear us?
Yeah, I can hear you. Can you hear me?
Yeah.
Yeah. It just looks like there's a little bit of lag.
Okay.
But yeah, I'll go first then. So yeah, having it, it's funny. Well, I used to have like the big pie in the sky, like, I want to hit like 10 million or something like this. When one of the books that I was reading, and I read this one a while ago, this book by Tony Robbins called Money Master the Game. And one of the things that he talks about in there is coming up with, let's do this from an expense perspective, right? Because a lot of people say that they want the financial freedom, but they don't really have a dollar amount attached to of what that even is. So let's break that down. What are your living expenses? Start coming up with, I've got to pay my mortgage. I've got to pay the electric and the gas. I've got to, pay for food, stuff like that. What's that amount? Great. Now you're at like level 1 of starting to get to financial freedom. Now, what's level 2 going to be? I want to be able to have enough money to not just cover my expenses, but to be able to go on a trip, this kind of a vacation, or have this amount to give as gifts to people. Great, that's your next level. Then beyond that, start to think about, what would you do if you could start to give to the kinds of charities that you want to give to, right? Like kind of like what Dennis was talking about, and then beyond that, wildest dreams. Right, like now, like you've got the Ferrari in the driveway, you've got the mansion here. Maybe you've got another home in Venice or something like that, and then you could start to break down. What does all that actually cost? Well, when I did that, I thought that I need to be generating a few million a year. Turns out that I only need to generate about $500,000 in a year to get to what my idea at the time was of ultimate financial vitality, right? And then it starts to become a lot more real because one, the price tags are already attached to it, but two, to what Dennis was saying, like now there's actually done the work of all this meaning assigned to it. So I thought that was a very interesting thing.
Cool.
No, yeah,
Alan?
I like what you did there. Basically, you've created a map, haven't you? You've created a map. You know, you have, when you create your goals and you break it down, you now have a destination. You know where you're going. You create a GPS. Whereas a lot of people say, yeah, I want to make $1 million, and that's it. You know, they don't plan how to do it. Whereas when you, and then when they go to do it, they don't see how to get there. They see it as it's too far. It's a term called hyperbolic discounting. All right, you don't see how this little action can help the faraway goal. All right, but when you break it down like that, you know the goals, and it seems more realistic, and you understand the power of just doing that one little thing. So yeah, I'm a big believer. You know, if you want to reach a goal, you've got to make a plan. That's the foundation, really, isn't it? Same with anything.
Yeah. Without a doubt. And so, hey guys, we're coming to the end of today's session, but let me ask you a real quick question. I'll ask Mike and Alan this particular question: is if you wanted to 10x your trading capital next year in 2025, right? So 10x, wherever you're at standing right now, what does your average monthly return need to be to compound to reach 10x?
You're asking math questions. All right.
Okay. Do you think it's 10% per month? 15% per month?
What, in just
20%?
1 year?
Yeah. 10x your account in 1 year.
So to have 1,000% return at the end of the year.
That's it. But how much do you have to have? How much do you have to? What would be your monthly return on your complete portfolio, all your money? What would the average return need to be to reach that?
I think it's less than 10, probably more like 5, something like that, or 5 to 7. Off the top of my head, I'm about to like pull out the spreadsheet to do the calculation.
So you would think it would be like 10, 15, 20%, right, per month. And Mike, you're pretty much on the mark. It is 4.53% per month would 10x your account in a year. So, wow, huh? Something to think about. Something, and I'm not one who says, try to generate X amount per month and all that kind of stuff. But at least you guys still have to have some baselines. And so, well, recapping, Alan, thank you so much. I have generated so many notes here. I love that aspect of hyperbolic discounting, the law of reverse effort and optimizing your trading. And so that and several others are absolutely phenomenal. So, so guys, which of these trading myths you want to highlight and just put it in the comments section? Mike, you have any other comments for Alan? And then Alan, pulling it all together in your key insights, please just let us know. What the question I'm asking is just, if you were to summarize everything we've done today, what would be your summary?
Well, I'd probably say the summary is work on your mindset more than looking for another chart pattern. The answers aren't going to be found in another chart pattern. That's where the real key to success is, I'd say. And it was for me.
Cool. Mike?
All right. Well, for Alan, I'd love to hear, where could we find more of your work? How can people reach out to you? Well, what's the best format?
Yeah, sure. So I've got my website, thedivergenttrader.com, and I'm across all the socials. My main ones are Twitter and Instagram, which is Trader Divergent, and also YouTube. I think it's the same name, Trader Divergent as well. Yep.
And I will place in the description on the YouTube channel, guys, and Mike will put it over on Spotify, the links for Alan's information, and also a link to his great book. Like I said, I just love the title of that book, and I'm going to dig a little bit deeper into it now. Is it available on Amazon?
No, it's a self-published book, so you'll be able to get it on my website.
Okay, cool. And so, okay, folks. Until next time, we will basically. Mike, do we have a guest lineup for next week?
For next week, I don't think so. It's you and I, buddy.
It's you and me. Huh? Okay, well, I look forward to that because the reason why I look forward to that is we are going to be tackling some of the other myths in the market, and we'll be looking at how do you transition from 2024 into 2025 successfully, leaving bad habits behind and starting new habits that it will help you be a more consistent trader. So with that, I like to say, Alan, hang on after I stop the stream. And so I just want to say aloha and God bless everybody. Mike, thanks a lot, buddy.
Thank you. Take care, everybody. God bless.
Take care.